Hey, what's going on, everyone? So I wanted to walk you through a strategy report slash backtest that I did on one of the new indicators that I shipped. And so definitely I want to walk through that and just kind of show you the signals that you get from this indicator and what it means as far as price movement. And other thing wanted to kind of show is that we do have a new website just to kind of consolidate all this stuff because, been building a few things and it's been getting kind of disorganized. So I'm excited to have it all in one place. But for the indicators, so you may remember or recognize this version of this page where we have the indicators and everything. And we're also starting to add the strategy intelligence reports. And so this is where I'm using over 4 years of NQ tick data to do essentially strategy test, opportunity space tests, and kind of back testing. And so the one I wanted to walk through today was this multi-period CVD. And let me just blow up the chart here for you. Essentially what this does is it looks at 3 periods for cumulative volume delta. My settings are 15 minutes, 30 minutes, and 60 minutes. And essentially, the way that you would want to trade it is when everything agrees, like the indicator has the option to kind of give you a highlight. And so you say, okay, now that this agrees, you would maybe want to look for some longs, right? And so you would want to look for a long somewhere right here. And then, if it goes the other way, then you would want to look for shorts. And so that's essentially like how you would use the indicator. I guess other things that you could look at for the indicator itself is, like, are we increasing in the deltas? Are we decreasing and things like that? Obviously, you want to look at market structure and all that. And you don't want to just enter blindly on the signal. But the strategy test that we did really is just looking at, hey, when this signal happens, what does price do? And so that's basically the basis for the strategy test. Other thing to note on the strategy test is that, it looked at, like, when the signal happens, it's great. And then when the signal kind of falls and crosses over zero, then it basically gets you out, right? So it says, okay, when the signal happens, what happens in price? And then once one of these CVDs go the opposite direction, then we kind of stop the clock. And so that's kind of the scope of the test that we did. But this is more information about the indicator, so definitely check it out. I'll link it in the description. But the strategy test, and so this is the one I want to walk through. So this is the test where I was saying that, hey, when this signal happens, what does price do? And so we'll kind of find that out here. So I'll just walk through it. I think it's pretty interesting. So again, we were looking at NQ futures data from January 2022 to pretty recently, right? And in that time, we got nearly 15,000 signals. So this is 15,000 times that, these all cross in the same direction, like they cross in the opposite direction here. So you can kind of see. So that happened 15,000 times in roughly 4 years. Looks like on average, this happens almost 14 times a day. Again, this is looking at the full day, right? And some interesting data points is within 10 points, or you'll get within 20 bars, price hitting 10 points after that signal happens. That happens over 75% of the time. And so that's just interesting data point to know if you're looking to kind of take scalps, to say like, hey, well, when that happens, like 75% chance you'll get a 10-point move. And so that's pretty cool. And then when you look at it for 20 points and 20 bars, it drops more of a coin flip, so 51%. And then your median favorable move at 20 bars is about 20 points. And then your median adverse move at 20 bars is about 22.5 points. And so this adverse move, and I'll jump back to this chart again. So the adverse move basically says like, hey, I enter here, and then now one of the CVDs is crossing negative. So now we stop the clock, right? And so within that period before that happens, how far does it move against you? And so within 20 bars, you get about 22.5 points. So almost nearly like a 1-to-1 as far as it moves in your direction versus moves against you. And so it's just kind of an interesting data point. When you look at the first 30 minutes of the open, this is the best window where you get 36.5 points move in your favor on average, with a over 70% hit rate at 20 bars. And so that's actually really, really good. And then the median bar is signal decay. So this means that how many bars does it take for the CVD, one of the CVDs, to flip in the other direction? And on average, that happens every 11 bars after the signal. And so that's, again, like a good just data point for you to know that on average, when the signal happens, probably after 11 bars, the signal may not be valid anymore, right? And so you may want to decide like how you kind of plan your trades on that. Now, again, this is looking at the everyday, treating them all the same. It's not looking at times a day or anything. It's just looking at every single signal in aggregate. Obviously, the numbers do change as you focus on higher probability times a day and things like that. But as just an overall, like, it's just an interesting data point. But this just kind of talks about what the study shows and the validation that we built into the AI infrastructure to do all that. But then, yeah, how it works is, basically we're looking at CVD for 15, 30, and 60 bars. And when all three cross negative to positive, then we get a bull signal. And when that fires, and when we cross from positive to negative, we get a bear signal. And that's basically the signal we look for. And then we say, okay, what happens after that? And then so when we get the signal, right, so this is the method, we basically have a stopwatch to say, okay, exactly at 5, 10, 15, 20, 30, and 60 bars, we're looking at 1 minute bars. We basically look at how far did it move in our favor? How far did it move against us, right? With that condition of if it moves against us and then we finally, one of the CVDs go the other direction, then you stop the clock. And then, it gives you kind of a net move so you can kind of see, like, is it more favorable or not, right? Yeah, and just another important note here that this is not a P&L backtest. Like, I didn't put targets or anything. I really just want to see what price does after the signal. And so some interesting data points. So if we look at the bull signals, which happened over 7,000 times in the last 4 years. So, we kind of talked about this at the top, but the median favorable move at 20 bars is about 20 points. You can hit 10 points at 20 bars at 75%, which we talked about. And then on the downside, you actually get a little bit more, right? So for 20 bars, you actually get 1 point more, which is good. Roughly about the same hit rate, 75%, you'll hit 10 points at 20 bars. And so the interesting thing is that it's not skewed to one direction or not, right? There's good symmetry in the signal, essentially. And so really, I think it's about trying to see, okay, like, what is the bias for the day, and then try to look for those signals, and you'll have the better chance of it. But it looks like the signal is well balanced as far as your favorable moves. And so you can kind of see the table here for the full breakdown. So this is kind of interesting. I just like to look at this because it's like your bull signal at 20 bars, median favorable move is 20 points. Your median adverse move is 22 points. And you can get 5 points at 20 bars 89% of the time. So if you really want to just be scalping, right, in theory, you can have confidence that nearly 90% of the time when you get the bull signal that you'll get 5 points within that 20 bars. Or 75% of the time you'll get 10 points within the 20 bars. It becomes kind of a coin flip at 20 bars for 20 points. And in kind of similar split for the downside too. And so when I look at this, I think it's, it's good for when the signal crosses, there's probably a good scalp there. And then you can kind of see, okay, is it a sustained move to kind of continue and enter back in that direction? But, 75% for 10 points is not bad. So it's just pretty cool insight there. And this kind of just shows points over bars over time and stuff. So same information. Yeah, just the move. Like if you weighted 60 bars, your median favorable move is about 33 points. Right. So, obviously the longer you hold it, the more points that you can get if it moves in your favor. And so this is a cool little visual that I like because it gives you kind of a probability of how much price will move within a certain time horizon once you get the signal. And so when you look at, okay, within 5 bars, once you get the signal, it's like, well, 95% of the time it'll move 2 points in your direction. I mean, it's not a lot, but it's just kind of interesting. 80% of the time, you'll get 5 points within 5 bars. So, I mean, that could be a good scalp if you're on 1 NQ. You don't pay too much commissions. 8 points, or 8 points, 64%, 65%, 8 points at 5 bars. So that could be a good scalp. Kind of not worth it to go a little bit longer than that, right? For within the 5 bars. Now, if you go to 10 bars, 8 points happens 74% of the time. So 67% of the time you'll get 10 points, which is kind of cool. If you want to wait 15 bars, you'll get 8 points almost 80% of the time. 5 points 87% of the time. So if you want to just kind of hang out for that. But it's just kind of like an interesting gauge what you could expect the price movement within the time periods and the distance. Again, this is looking at everything in aggregate. When you put everything in aggregate, obviously it makes the number smaller. There are going to be times of day and regimes in the market that'll give you bigger moves, but it's just kind of a good framing for what to expect when that signal happens. And so I thought this was interesting. So this was looking at the magnitude. So it's like, every signal is great, that's fine. But then what happens if you have like a really weak signal versus like a stronger signal as far as the magnitude of CVD when it crosses, right? And so when you have a weaker signal where the CVD cross isn't that strong and the magnitude of CVD isn't that big, this represents about 20% of the signals. And this may be like lunchtime and things like that. Your median favorable move at 20 bars is about 18 points, and the adverse move is a little bit more. So, but nearly 1-to-1, but a little bit less. And, I guess no surprise, the stronger the signal, so stronger magnitude, the more points that you get that it moves in your favor. And so that's just an interesting kind of tell where it's, you got 20%, which are going to be a low magnitude signals, probably happening during lunch. And then you got 26%, which is your like strong signals. You get the most move. This is probably happening in the morning. And these happen about 3 times a day, 3 to 4 times a day. And in your medium magnitude, I think these are just kind of like after the open and kind of before power hour. But it's good that there's a linear kind of increasing relationship between the magnitude of CVD and the movement that you get, right? And so there's some correlation there, which is good. And yeah, there's a little note here with regime dependency. So it's like the higher CVD moves obviously produce the bigger, moves in your favor, but the ratio of the moving in your favor versus not, it stays the same, right? And so that's good for like risk management. Yeah, like look for the stronger crosses in CVD, and those are the ones that you can kind of hang on to. So that's good. Now this is my favorite chart because it's talking about, okay, because you're not going to take these signals every time throughout the day, right? That's the best way to lose a bunch of money. But it clearly shows that like the open is obviously where you're going to get the most points, right? And so when you look at this chart, we're looking at, I guess we can take that off. So we're looking at the median favorable move at 20 bars. And so this is saying, okay, between 9:30 and 10, the first 30 minutes, when you do get the cross, your median favorable move is over 36 points, right? And so that, that's pretty good. Like you should definitely take those. And when you look at the hit rate of hitting 20 points at 20 bars, at what percentage does that happen? That happens 71% of the time. And so what this tells me is that when the signal happens, 71% of the time, you'll get 36 points on average, right? And so that's really good. So like that, like you should focus on that first 30 minutes. If the signal happens, take it, like for sure. And it's still pretty high if you wait up before, for another hour and stuff, but your favorable points kind of diminishes. And then throughout the day, it gets a little bit less in the hit rate, 46% towards the end of the day and all that. So it's like the real edge for those entry signals is going to be in the morning. And so that's the super golden nugget, I think, for this indicator. So definitely just make a note of that when you're using that. And also, yeah, here you can kind of look at for 20 points, for 10 points, you get 10 points 88% of the time, right? At 20 bars. So it's, like you get the 10 points pretty good, 70% is still pretty good as well. Happens about over 2,000 times in the first 30 minutes in the last 4 years. So it doesn't happen a lot, but it's there when it's there. And then when we look at year by year, so this is looking at the just median favorable move at 20 bars. And so in 2022 it was 25. It dipped in 2023, but now it's, coming back into this year. I think this is only looking up until April, so it's not a full year of data, but it looks like, points wise, it is giving us more moves. I guess thinking about this market and like how crazy uptrend it is, that's probably true. This is what you're seeing. And then your hit rate at 10 points, right? So you're getting 10 points at 20 bars. This happened nearly 80% of the time in 2022, 70% of the time in 2023, and then this year, so far up until April, it happens 84% of the time. So again, like there is very high chances that you'll capture at least 10 points when that signal happens. And just a table kind of showing that. And then so for day of the week, so this was interesting. As far as the signal distribution, like it kind of is the same, like the 3,000-ish across, all the days of the week for the last 4 years. So it's not like skewed to one day or the other, like it just happens. And I guess it kind of makes sense because it's really just the ebb and flow of aggressors, right, in those smaller time frames. Estimated favorable move at 20 points. So it was like 21 on Monday, 20 on Tuesday, 21, 20. So it's pretty stable. Like, I guess there's not a skew of which day of the week is more favorable. So I think it's really just focusing on the open, right, for the best moves. And then so for the signal frequency, so we talked about this at the top, but yeah, we had about 15,000 signals in the last 4 years. If you count every single signal, and so if I look back at this chart here, right, so like you saw just in this screenshot, it's like 1, 2, 3, 4, 5, 6, 7. This is like 7 signals, and this is only looking at like half of the day. So the signals happens a lot, right? And it can be noisy. So that's why you have to really take into account market context and all that. But these are all the signals that this backtest or strategy test is counting. And so that's why it's showing there's, they do happen a lot. In the opening window, this only is 15% of the signals happen at the open. So this is your best time. So these are the ones that you should definitely focus on. And the strongest signals where you have the highest magnitude of CVD when the signal crosses, that only happens less than 4 times a day. So that's the one that you really want to watch out for. So I guess to really optimize the edge for this indicator, focus on the open and then focus on the signals where the CVD is strongly in the favor of the direction that you're trying to trade. And so that'll give you a little bit more edge in favorable move. And so these are some chart examples. So I have personally, compared them to on my ATASX charts, opened them and just made sure like they all check out, which is really exciting. But it just shows you, like in this one on November 19th, you had 213 points in your favor and it moved 20 points against you, right? And so this was good, right? This one was good, 128 points. This one you got 300 points if you held it that long. And this one's a good trade at 150 points. So the average of 20 points in your favor is really just the average, right? But there are times then you have good risk reward that you can get a really good move from these signals as well. And so these are just kind of random examples that the AI picked. It basically shows you like how it all played out. And so you can kind of see that, which is pretty cool. And so now for the drawdown sizing. So this is looking at how large did it move against you before the second CVD cross and the signal degraded. And so if you remember back to here, so, when the signal happens, this is great. But then as soon as one of the CVDs cross, we're saying, okay, the signal is no good anymore, right? And so we're basically measuring from this signal to this signal. If price moved against you, how far did it move against you? And so when you're looking at this, it's saying, well, this happens. You'll basically know within 11 bars that the signal is no good. And the P50 for the max adverse move against you is almost 40 points, right? And so that's just on average, you might lose 40 points if you just held on to it before that signal cross. The highest that you would lose before that signal cross is about 100 points, right? And so this is your top 10 worst kind of moves against you. And so for me, it's like, well, so part of your exit strategy with this indicator is really watching it to say, okay, if it crosses, get out. Like, let's say you don't have a stop, or let's say your stop is far away or whatever. As soon as you see this, like, you should just get out, right? Now, that's if you were just following the indicator as a system and all that. But this is just basically saying that from this entry signal, this is all good. We're expecting things to go up. When you get the first sign of like aggressors are going the opposite way, that's when you should get out. And the kind of top 10% worse move that you would have is a little bit over 100 points. And so the good thing about this is like 100 points, depending on how you size it, it'll hurt, but it's not going to blow you out, right? And so that's just one of the things where, like keep an eye on the indicator and how the CVDs are turning, and then make a call if you should exit or not, right? Because then like your maximum loss would be around this 110, right? Within the top 10 worst moves against you. But on average, you may just lose about 40 points. And so that's just kind of like a good mental model to have, from a scalping and kind of trading perspective. And then this is a super cool table to kind of walk through, like your stop size here. What percentage of time would you still be in the move based on your stop size here? Looking at for 10 bar move, right? Let's say within 10 bars, if you put your stop at 30 points, within the 10 bars, 74% of the time, it would not hit your 30-point stop. And so that's just a good kind of mental note, kind of using this to trade, knowing that, okay, like I'm only going to hold this for 10 bars. Let me try to get that 20 points or 30 points or whatever it is, knowing that if you put your stop at 30 points, it will not hit your stop 74% of the time, right? So that's pretty cool, right? So you'd have to kind of figure out what that means for the targets that you're going after. So I guess one example to kind of look at, it's like for the 20 bars, right? So it's like at 20 bars, the median move is about 20 points, right? So if you did a 1-to-1 stop, right? 1-to-1 stop, 20 points at 20 bars, 45% of the time you would not get stopped out. But if you wanted to make it a little bit wider stop, then 63% of the time you would not be stopped out. And you have a 75% hit rate of hitting the 20 points at 20 bars, right? And so, it's just kind of the way to kind of look at this. And so, yeah, that brings me to the end of the study. There's more details here and all that, but I just thought this was super interesting and wanted to share with everyone. Definitely check out the page and kind of read through it. Let me know if you thought this was interesting. If you have other strategies or other indicators that you would like to run reports on, please let me know. I have this data, I have the infrastructure set up, and we can do some really, really great things because we have the individual tick, for the last 4 years. Awesome. Well, thanks for sticking around and good luck, and don't get caught. Thank you.